If you do not have good books, all your efforts, all your learning about break even and how to bid don't matter because you got bad information.
This is the Google way of small business bookkeeping. This is exactly what your bookkeeper should do. And if they're not willing to do it, they need to be in somewhere else.
Hand this chapter to your bookkeeper and say, are you willing to do this?
If you do not abide by these non-negotiables, you will have serious implications to the quality of your books and the quality of the decisions you're able to make.
No DIY bookkeeping. That's the place to start.
Expert advice, practical tips, real-life stories. Have less stress, more time, and more money in your business. Welcome to the Cashflow Contractor.
Martin, I am excited to talk about this because it's one of the things that I don't spend enough time on in terms of my own business. My business is a lot simpler than a construction business in terms of bookkeeping, but you have such a brilliant mind for it. And you're writing a book that is really trying to simplify and give guardrails, is what I would say, to how a business owner should be looking at their books. And one of those guardrails is having non-negotiables.
Right.
And so you're going to walk us through those, but I want to hear from you first. After listening to this episode, what are people going to walk away with?
People are going to walk away with realizing what has to happen to have good books. And that if you do not have good books, all your efforts, all your learning about break even and how to bid and all this don't matter because you got bad information. So that how to use the information is great. It's a subject. I love it. We've talked about it a million times. But how do you know you got good information? I've summarized it in one place, one of our earlier episodes. I said one way is no DIY. In other words, you're not going to go fly that 737 to Denver. You're just not going to do it.
Yeah.
Even though you're healthy and smart and kind of understand the principles of flight, you're not going to do it. And I've just come down. If you have a very simple business like this handyman who fixes our appliances and has for 20 years.
Yeah.
He just comes out, hands me a ticket, I hand him a check, right? It's cash basis, no receivables, no nothing. Okay, you can do that. You can let your bank do that. That's a bank statement.
Right.
But if you get into anything, most of what our clients are, it's a little bit complex, has cost of sales, has bids, has perhaps inventory, has deposits, prepaid deposits, has money committed to the work before you've received any. If you got all that kind of stuff going on, you can't do it by yourself. So don't. That's the place to start. No DIY bookkeeping. I don't care that your mother-in-law needs a job or that your daughter is home with the baby. And I mean, if they're booked, if they're trained bookkeepers, fine. I'm offending some people right now, but I love them. I'm just going, I don't care. So even at that, let's say that you get a bookkeeper. This is what the topic is today.
Well,
You get go ahead.
Hold on 1 second. So by the end of this episode, people are going to be able to walk away with a clear idea of exactly what they should have set up for their books and exactly what they should not negotiate on.
Yeah.
That's
correct.
Am I missing anything?
No, you got it. And
All right.
It's a chapter in my book. And
The new
it's
book, not the old
in
book.
my new book.
Okay, so unreleased. This is
Called Running on Numbers.
exclusive first take.
Glimpse. First glimpse, right.
Yeah.
So it'll probably be nothing like it. No, but the chapters, first words in the chapter are, read this so that you know what's going on, but hand this chapter to your bookkeeper and say, are you willing to do this?
Okay.
Can you do this? And
Okay.
if they say yes, they're a prospect. If they say no, that's ridiculous. You don't need to do all that. And it's time to go look for somebody else.
You know, what comes to mind for me here is people are very opinionated about systems or frameworks without even really knowing it sometimes very clearly know it, but they have clear opinions. This is like, I'm an Apple person and
Right.
they're opinionated and they're all about it. I'm a PC person. I'm all right. I'm a runner, or I use this service, or I follow this team, or This is my software stack. I am a Slack person. I am a Gmail person. I'm a Microsoft person.
Right.
right? They're very integrated into that. And essentially, with small business bookkeeping, it's not as clear cut as Microsoft versus Google.
Right.
There's so many different systems of how you should categorize, how you should generate reports, all those kinds of things. And what you're doing is you're saying, hey, I get this, and I actually defined this system. I created this is the Google way of small business bookkeeping. This is exactly what your bookkeeper should do. And if they're not willing to do it, they need to be in somewhere else. But this is what works.
I want to throw this out. I did not invent this stuff.
No, I'm not saying you invented it. I'm not saying, just like Google didn't invent email. Right?
Okay. Yeah, right.
What I'm saying is sometimes it's not the same person that invented something isn't the person that brought it to market. Right? And that's what I think, and I think that's what you've done is you've said, hey, bookkeeping is an amazing thing. It's existed for hundreds and hundreds of years, right? Maybe a century or even before that, right?
No, 800 years.
800 years. Okay. Yeah. It's been in existence forever, and it serves an incredible purpose. And as we've gotten more and more complicated in how we run our businesses and technology and all this kind of stuff, this is what you need to be able to do. Like, this is the guardrails.
And I have to say the things I'm talking about here have not changed one whit in 800 years. Right. Only the method of doing it. Instead of an ink and pen, we use a computer.
Yep,
and
exactly.
Bless the computer's heart, because when I first got out of college, I actually, one of the first jobs, I kept books by paper.
Yeah.
Okay. At the end of the day, all your entries had to balance. How many times did that happen? Like never. So yeah. Anyway.
Okay. So that's what we're covering. Hey, this is the system for bookkeeping. These are the non-negotiables for operating inside of this bookkeeping system, running on numbers. So, and this is the framework. So go ahead and share one, what is a non-negotiable? I think I have my definition, but let's go ahead and define that really quick.
Non-negotiable, somebody says, well, I can do everything but that. I said, well, no, that doesn't qualify. Moving on down the road.
Okay.
And there's one in particular here that I'll mention.
Okay.
That there might even be a little slack for a few days, but I don't want to give them even a single crack.
So why are you having non-negotiables that they can't have slack?
For various reasons. One, the books won't be correct. Perhaps that's one reason. The books won't be timely, therefore they won't be useful. The books can't reproduce the reports that you need to make the decisions that we talk about. You need to be able to stand up to the scrutiny of the IRS or whomever else might want to audit you. So these are all, you need to not be subject to fraud.
Okay.
We could just sit here and start talking about the instances where the bookkeeper ripped the company off. Just going, how do they get away with that?
Yeah.
And, that's how. Nobody looked. They didn't record it, right? So, anyway, that's mostly. And to handle things like deposits and work done in excess of what you billed, those really distort your financial statements. And keeping that stuff keeping track of that is hard. And one thing I can say is generally, the business owner's not going to do it.
Yeah.
And very often, the bookkeeper doesn't know how to do it. Now, QuickBooks has some things and, that make it easier, but work in process, managing that properly, and work done in excess of what you billed, managing that, pretty damn complicated. And even if you can figure it out and you can do it as an owner or a senior person, if you're not the CFO or not the accountant, what the hell are you doing that for?
Right.
That's like sending your bookkeeper out to lay brick on the second story and get the OU logo in the stadium at OSU.
Yeah.
You know what I'm talking about.
I know exactly what you're talking about. Okay. So we know what a non-negotiable is, why it matters in this instance. If you do not abide by these non-negotiables, you will have serious implications to the quality of your books and the quality of the decisions you're able to make as a business owner using your books. Right. Okay.
You're just
how many non-negotiables are we going through, Martin? Is this 25?
1, 2, 3, 4, 5, 6, 7, 12 that I've got here.
Okay, 12 non-negotiables
Right.
of the running on numbers framework for bookkeeping. Is that correct?
Right.
Okay. Let's start with number one. And
Okay.
hold on. My concern here is this is going to go right over my head as a business owner because I'm not a bookkeeper.
Well, I hope it's my role to make it where it doesn't, right?
Okay.
Now, if we're going to have a real short podcast today, which maybe we'll, not go too deep into it, there might be some questions, but I think, well, let's do the first one. And
Okay.
And the first one is you have to use double entry books. So, boom, already. What the hell do you mean by that? Double entry books have debits and credits. And what they do is they record for everything that happens in your business. Where did the money come from and where did it go? Okay. That is the genius of 800 years ago, how to do that. Don't need to explain it all in detail, but the opposite of that is single entry books. So let's say you're a plumber and you get $1,200 check from a customer and you put it in the bank's $1,200, but it was income. Let's say later on you go borrow $1,000 to buy some inventory from your bank and you put that $1,000 in your bank. Now you got $2,200 in your bank. Part was from sale and part was a loan. Well, those are different things and they need to be kept separate. If you don't have double entry books, you can't do that. Now, what do people do that don't have double entry books? Number one, they don't do anything to use your bank statements, which is just pluses and minuses. Or what I see often is they try to do books on a spreadsheet, right? An Excel spreadsheet. So down the left side is all the money in, all the money out. And maybe over to the right, they have rent, utilities, materials, payroll. So they kind of have this matrix, but that matrix cannot be compiled into the necessary reports. So I don't need to go into it a lot more than that. I appreciate people who track on Excel more than people who do nothing. I didn't say I like them. I said I appreciate the effort, but really they gain very little that they wouldn't get just by looking at their bank account on their app. So that's the number one thing. Got to be double entry books. Generally, that means for most of our listeners, that's going to be QuickBooks or Xero or something like that.
Right.
There are softwares out there, Jobber and all those that purport to do that. I haven't really seen evidence of it. I mean, I see you can do your billing and you can pay your, I don't know what you pay. I go, that's somebody's version of not good enough. Okay. So that's number one.
What I hear you saying is if I'm on QuickBooks and I have a bookkeeper, we're probably using double entry bookkeeping already.
You are.
Okay.
Well,
then that's.
I guess you could keep single entry books, just make pluses and no, that's all you got to know is use a legit software, and maybe Jobber and Service Titan are legit, but they're, my limited knowledge, they're not. So that's the number one thing. You need real books.
Okay.
The number two thing is accrual accounting. Okay, we've talked about that before. That's another one of those words. But accrual accounting means you make entries into your book at the time they occur, not at the time they're paid. For example, if you just finish a job and you invoice somebody for $50,000 on the last day of the month, okay?
Right.
And let's say it's the last day of the year, you invoice them. If you are on the accrual basis, that $50,000 will show up as sales this year. If you are not, it will not show up until you get paid sometime next year. Because remember, we're talking about December 31st. That's a big difference.
Yeah.
50,000 more or less this year, 50,000 more or less last year. Correctly, it's when it's due, not when it's paid. So when you make the invoice, we don't need to know the rules, but it needs to be done that way. I want to tell everybody when you talk about cash versus accrual, which are the two methods that are available for keeping books, people will say to me oftentimes, well, my accountant says I'm on the cash basis. They're talking about paying taxes. Doesn't have anything to do with what I'm talking about.
I think for most people, Martin, they get this and they understand the difference between the two. They may be running on cash, but I think most are going to be on accrual, especially if they're in QuickBooks, what I've seen, and maybe you see differently, but if they're in QuickBooks and they have a bookkeeper, they're probably on accrual.
Right.
Not necessarily, but typically that's the case. So
I would be reluctant to say the majority, but certainly you do see it. Well, if you're, it doesn't matter. It needs to be on a. It needs to be on a.
okay.
Accrual.
So
you already
double
know
entry
what that
bookkeeping is a
that's good.
must. Accrual accounting is a must.
Right.
What's the next non-negotiable?
Okay. You have to have a viable chart of accounts. Okay.
Okay, so
So
this is good, but I don't understand what that means. Go ahead.
Well, a chart of accounts. If let's say everybody knows that you have income as a type of account, and you have expense as a type of account, and together those appear on the income statement, with the pluses being money coming in under income, and the minuses being expenses going out as expense. You subtract the two, and that tells you got a profit or loss. If my income exceeds my expense, I got a profit. My expense exceeds my income, I've got a loss, right?
Okay.
Okay.
Yeah.
So I could put all my sales in one account, income, and I could put all my expenses in one account, expenses. And I could get the number, did I make a profit or not? But I don't have any information. My income might come from 4 products.
So all you're saying is that you need to be able to segment your expenses and your income. That's what a viable chart of accounts is.
And everything, because there's more than that.
Yeah,
Right.
there's more than that, but I understand. Basically, you need categories.
Right. Into useful detail.
Gotcha.
I don't think you'll get much into useful detail. I've had people with 10-page freaking P&Ls, and it's ridiculous. But, depending on your business, different. But a 2-page P&L that gives you because you can always go say, well, my rent was too high, or marketing.
Yeah.
Marketing was $50,000.
Okay.
Wow, what did that? Well, you can click on it and see what it is.
So at some level, when you say viable, you're saying you need to have enough categories that are meaningful, but you're also saying you don't need to have too many where it becomes a mess and you don't actually understand it.
Yes.
So viable is a clearly defined chart of accounts that makes sense for your business.
Useful.
That's useful. Okay. So as we go through this, I think what's helpful, Martin, what I would say is what is double entry bookkeeping? You have a non-negotiable double entry bookkeeping. What is the problem that it solves? Why is it a non-negotiable? What's the problem it solves?
Because it allows you to know both sides of the transaction. It tracks where some money came from, and it tracks where it went.
Perfect.
So,
that's all I need to know.
there you
Perfect.
go. Matter of fact, let me just throw out one thing, because I love this fact. That is what bookkeeping did. So simple.
Yeah.
But the words debit and credit, okay, everybody's scared to death of them, doesn't know what they mean, how when to use them. I've had accountants tell me, I don't know. We're supposed to do this because they got it by rote. No, the word credit is a Latin word you first used 800 years ago, and it means to trust. Debit is a Latin word that means to owe. Credit and debit.
Okay.
Debit is the account. You debit the account where the money went, and you credit the account where it came from. So if it came from sales, you credit sales, you debit the bank, okay? The sales account trusts that the bank will provide an accounting of the money. The place they got the debit, the bank owes an accounting. And that's what the words mean, and that's why they were chosen.
Okay.
So
Got it.
probably too much humor.
Too much. That's okay. No worries.
But
let's go to the second one. So I know I'm revisiting this. I just want a very clear statement of the problem it solves. So accrual accounting is a non-negotiable. What's the problem it solves for the business owner?
Incomplete information.
Perfect. Incomplete information. Excellent. Love that.
Okay.
Then the next one with the chart of accounts. What's the problem it solves?
Visibility. Transaction visibility, so that you can see what happened at a level that you can do something about it. If I look at marketing as 50,000.
Yep.
I don't know that I could cancel that magazine ad and say 500.
Right.
500, canceling that ad is an actionable item. Looking at 50,000 is oh no, that's bad. Right.
Right.
So
Okay.
it gives you.
Let's go to the fourth one. Fourth non-negotiable.
Fourth non-negotiable is source documents. Okay. Source documents.
What problem does this solve?
It proves that the transaction was originated. It validates the transaction. A source document is a document from another party, in other words, not your business, that authorizes or identifies the transaction. It's a receipt.
An invoice.
Or It could be a lease, right? I'm going to pay money every month on my lease, but I'm not going to get an invoice, but I got a lease that says I'm
Okay.
going to do
Gotcha.
this.
Okay, cool.
But you need, in reality, bookkeepers, I don't ask them to do this, but, well, I kind of do. You shouldn't make a entry off a check that you wrote or a PayPal payment that you made.
Yeah.
You make the entry off a document that says, hey, you owe me $500 a month
Right.
or $500 that I get from a marketing company that's the other guy on this call.
Right.
And okay, I've got that document. I make the entry and then I go using that entry as justification. I go pay this person. However, it got so complicated because there's so damn many ways to pay things now. How do you track it? Where's the receipt? Where's the originating document? But every transaction should have a priori, and before you use it, before you make an entry, a source document that dictates what that entry is.
Yeah, makes sense.
And from somebody else.
Yeah, from somebody else.
Okay, so, and that's one I'm going to cut a little slack on, guys, but it also is the proof, as we all know, or all fear. The IRS comes in and goes, what the hell is this? $400 at Walmart.
Right.
And I go, well, there's a ticket there. Well, you can buy groceries at Walmart for $400. Oh, I got this itemized receipt and it shows it's paper and, bulk toilet paper from, what it is.
It's just verification.
So
I totally understand.
Authorization and verification of the transaction.
Okay, great. So we have the fourth one. Let's go to the fifth one.
Okay, really weird. Fifth one is daily entries. Okay.
Okay.
That means, and this is particularly egregious in people I see that have hired part-time bookkeepers. Well, for a lot of bookkeepers, they just accumulate them and say, what I see often when I go to look at my clients' books is we're in March right now, and there's nothing in February. No entries have been made.
Okay.
They're in the bank feed in QuickBooks, but they're not in the books.
Okay.
You go, well, what goes on? Well, we just save them, and then the first 2 weeks of the month, like now, February, we make all these entries and reconcile and catch the whole thing up. But for a whole month, it's been gone. Okay. One of the great benefits so what you should do is daily entries. Every source
So
document.
what problem does it solve?
It solves the problem of missing stuff. Okay. Not understanding what that transaction is. That's one of the biggest. Let's say you mistakenly wrote a guy, paid him off a invoice paid him off a statement rather than an invoice.
Okay.
And you paid this guy $2,000 instead of $1. Right.
Right.
And he's got your check or your cash and he's gone. You didn't even know it because nobody matched it up to the invoice or anything. And he's gone. I mean, I call it skip town. But if you're entering transactions the day they happen, which is pretty vigorous, but within 48 hours of the time it happened, you're going to find things, you're going to see things, you're going to understand why is that extra payroll going out to a guy I never heard of because you're looking at it, but you're checking it as you go along rather than doing it all at once and getting overwhelmed.
Okay. It makes sense. It helps us not miss anything and it helps us be up to date and accurate and to be current.
Yeah.
Right.
And
Okay. So
and you don't have that workload on the third day of the following month.
Rather than having this batch processing that you have to do, it happens in real time.
That's exactly what you can call it, is batch processing.
This is really helpful for me outside of bookkeeping, just to give you clarity for myself, because you can think of books as a knowledge base, right? You can think of books as a knowledge base of financials, but you have a knowledge base of projects. You have a knowledge base of your personal information and your notes. And any knowledge base basically needs to follow what you're saying so far, in my opinion. I'm getting into the weeds and I'm like going into a new area, but this is extremely valuable. So let's just keep going because I don't want to.
I don't know if this is all perpetually true, but I would say time deteriorates all things.
Oh yeah, the moment you click publish on something, the information's deprecated.
Okay, now this is a waste of time. I'm going to take a couple of seconds. I was wondering if the sun degraded granite. Okay,
Okay,
because
interesting.
because weathered granite, you can work it, but you get in there just a little bit, and granite's a different animal than it is right on the surface. And the answer is yes. So there you
Okay.
go. We'll,
Well, there you
we'll
go.
have another episode to say why it's not obvious. But time and exposure degrade all things. So don't let time pass, right?
Yeah.
Okay, we're on the next one.
We're on the next one after daily entries. What do we have? What's the next
Reconciling.
non-negotiable?
Reconciling.
What about
I think
reconciling?
well, the one that people
What's the
think of most,
non-negotiable?
the non-negotiable is that you don't know if your books are correct. You have to reconcile with somebody else's books.
Reconcile with someone else's books? Explain that
Someone
to me.
else's books. The bank,
Oh, okay. Reconcile.
right?
Okay.
And it doesn't all. There are some that you reconcile with yourself, but people think of reconciling as to make sure, because that's what it is, that you and the bank have the same number of
Yeah.
deposits and checks, right? So that's pretty clear, and it should be.
What would you identify a bank or a credit card as? Like, for example, you said source documentation was one, but that's more so for like other parties in terms of customers, vendors, etc.
You got a source document for everything you do at the bank. You make a
Right,
deposit, get a
but
deposit
what do you
slip.
call a bank? Like, I have a customer, I have a vendor.
Oh.
What's the equivalent for a bank?
Bank is a bank.
A bank is a bank. Okay, so you
It deserves
reconcile.
its own word
It does. It's
because
different.
one of the greatest services of a bank that nobody thinks about is that they're the bookkeepers of the freaking world.
Yeah.
That's a major service that they provide, more so than lending you money.
Wow.
And they do that. I mean, just think about it. The IRS says, "Hey, man, you owe us $15,000." You go, "I paid it." They go, "Well, we don't have it." You go to the bank and you find that check cleared, it's over, right?
Right.
Other way around too. I paid it and it's not there. But that's what they do. And very occasionally they make a mistake and it's a big deal and they follow it up. And, you
Yeah.
know, I can think of maybe 3 mistakes that I've had by a bank in 51 years of being in business, maybe 4. You know, so it's a pretty rare event. But they're a known source of, there you go, your knowledge that you're checking against, at least for bank transactions. Now you need to reconcile every item on your balance sheet. We don't need to go into all that, but you've got to reconcile the bank. You got to reconcile the credit card. See if you and the credit card company have the same
Okay.
entries, you know, debits and credits, what you owe and what you paid. They add the interest. And I have to tell you that I do keep, I shouldn't, but I do keep books on 3 companies. And man, I'm not every time, but I'm always got something I'm off with the bank. I go, damn it, I know what I'm doing. How did that happen? But I don't know, but there it is, and they're right.
Yeah.
And
Okay.
usually it's a double entry. You know, I entered a deposit twice or something.
So is
something
the
like that.
non-negotiable? I'm trying to think of what the non-negotiable really truly is, and in a very clear sentence, and then what problem it solves. So reconcile bank or reconcile balance sheet. would you
Reconcile
say?
every account on the balance sheet.
Reconcile every account on the balance sheet, and what problem does that solve?
It solves the problem of having missed or extra transactions that didn't occur. And you may call the credit card company and they charge you and you don't have it. You know, so you found that. And now who's right and who's wrong, we don't know yet. Maybe they charge you incorrectly or somebody used your credit card or maybe you just missed writing it down.
So essentially, the problem that it solves is it allows you to have a single truth, a aligned truth on transactions.
Yeah.
Aligned truth on transactions. Okay, cool. All right.
Yeah.
So
And I want to throw out the one thing. It really is best when it's done with an outside entity. right? Not yourself. But one of
Someone
the
else
things that-
reconciles it, is what you're saying?
No. Somebody like you reconcile with a bank or a credit card company, or
Right.
you can reconcile statements with your vendors.
Okay.
How much do I owe? We owe this
Okay.
amount. Well, all these transactions, pluses and minuses, did they come up to that same number in my books that you have in your books? If not, why not? And fix it, right?
Okay.
Right.
With an
But
outside
there are
entity.
certain things that you have to do inside. You want to reconcile your accounts receivable. And theoretically, you could write all your, it's what they do in an audit, write all your customers and say, do your hard records show you owe us $11,000 on this date? Is that what
Yeah.
your records show? Well, mostly you just look at it and say, do I have a corresponding deposit for the bank that this account receivable went away? Was it written off? But anyway, that's one place where people, embezzlement takes place a lot, is somebody collects that receivable and just deletes it.
Yeah.
So it doesn't show up. Well, if you had it done last month and it was there and you're looking, it's not there this month and you can't find a deposit, you got a problem. And I hope that people listening to this think, I don't want to do that. I want to go build driveways. Okay. That's why don't do it DIY, right?
Quick ad break, contractors. I want to tell you about Quo, formerly OpenPhone. I see something all the time. A customer calls in, they talk to one person on your team, and then they call back later and get someone else, and they have no idea what's going on. What do you do when you have a frustrated customer and your team is scrambling to piece it all together? It's just another fire for you to put out. Quo fixes all of that. It's an AI-powered phone system. Your whole team shares one number, or they can have their own individual numbers, but they can see the full call history. They can listen to call recordings, they can see automatic transcriptions, and even AI summaries of exactly what was said. You can tie it into your CRM too, so now the customer info isn't scattered all over the place, it's in one single source of truth. If any of this sounds appealing to you, check out the special offer in the show notes just for our listeners. Thank you for listening. Back to the episode. So, okay,
Next.
let's go to the next one. So this is
Next
number
one.
7.
Well, I'm drawing arrows on them, but I'm not putting number 7.
That's okay. I'll just
Yeah, I think
recap
it's
really
7.
quick. 1, we have double entry bookkeeping, accrual accounting, viable chart of accounts, source documentation, daily entries, reconcile every account on the balance sheet with an outside entity so that you have aligned truth on transactions. Let's go to the next one. Number 7.
Matching. Matching is the principle of,
Well, what's the non-negotiable? Give me, like, you must match, or what is it?
you need to record expenses and revenue you need to record revenue and expenses in the same period. The expenses that are used to generate the revenue need to appear in the same period as the revenue itself.
Can you give me an example when someone doesn't do
Yeah,
this, or
100%. I start working on my project. I haven't received any money, but I know it's coming. I got a contract. I got a free skid steer. I'm out there digging a pad on my building. I'm paying for the mob. I'm paying for the guy. Paying for the skid steer. I'm paying for the materials. I'm going to stake out the pad. All this stuff. So I got expense.
right?
That goes in February. I don't even invoice until the end of March. So
Okay.
that whole time that the expense is accumulating and showing a loss, but
Right,
it's not really a loss. It's just I haven't billed it yet, right?
right.
So matching is how do you get them both in the same period?
Mm.
Okay. So some simple things you can do is like if you're going to invoice on the first of the month and you did all the work last month, go ahead and date the invoice the 31st. That'll put them in the same month. And then the invoice for the profit, the money coming in, will be in the same month as the money going out, and you'll know for that month if you made a profit or not.
Okay.
Now, it's
And
not always that
obviously, I'm
easy.
sure there's circumstances where you can't avoid this,
Yeah.
or avoid the delay of the invoice, but wouldn't the best
What a
practice
great-
just be to
what a-
invoice faster or sooner?
And
Real-time invoicing. Okay.
yeah, you
Okay.
can. That's one thing you can do is invoice work to date on the last day of every month. Now, some customers are going, I don't want to get 25 freaking invoices from you. And you can say, well, you don't have to pay them till this day, but I'm going to,
I'm going to invoice them, but you
I'm
may
going
not.
to invoice them for matching. That's one
Yep.
thing.
Okay.
But this is a great segue to the next one. So
Well,
matching
hold on.
is you have to get the income in the same period as the expenses incurred in generating that income.
So the non-negotiable is you must match for the same period, or what would you say?
Matching means for the same period.
So
Yeah.
you must match, I guess, is matching
Yeah.
is a must. Is okay.
Right.
So you must match, and what's the problem that solves?
Roller coaster profits.
Roller coaster profits. Now you're speaking the language that everybody
Up,
understands.
down, 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 up, 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 down, down, down. And then it gets really, that's one job. You got 10 jobs going. Every one of them's in some phase of
Yeah.
up and down. And so you have, we're up, we made $300,000 last month.
Yeah.
We've never even sold that much before. Oops, we lost 275 the next month. Or, try. And that's one of the major reasons that people I work with don't look at their books. They go, it's meaningless. And it is meaningless.
Yeah.
I mean,
Because it's inaccurate information.
eventually, when you close out a whole year, plus or minus the strays that you have at the beginning and end, it's going to be pretty accurate because all that stuff is washed out. But matching is, can I cuss on this thing? Matching is a bitch. Right? It is hard. We can put stars over that if that's too
No,
rogue
it's good.
for us. And that's why
It'll
I'm
be in the
just going,
teaser. It'll be the first thing you say. Magic
yeah.
is a bitch.
That works for me because it is. When I was writing about it, trying to say, okay, I'm going to advise people how to do this and teach them, and I realized I can't do that. I have, and like you said, what if you can't? What if it's not just one day back? And then how do you handle it if you got 6 invoices and just going, you know what? I'm going to advise people, don't freaking do it. Get a skilled accountant to do it for you.
Yeah.
Okay. And then this segues right into the next one.
Yep. What's the next one? Number 8.
And the next one is WIP, which WIP, work in process.
Okay.
And it is the official resolution to the matching process. Okay.
Yeah.
It takes each job and it says, hey, I've done work in excess of billing. In other words, I've done more work, incurred more expense than I billed for. And maybe on the next job, I billed for more revenue than I've done work. Mm-hmm. And WIP is a process that good accountants can do. Every bonding company needs it, so it's out there being done. But good accountants can do, and they correct for that. They get the excess billing and the excess, meaning you billed too much because you haven't done that much work yet, and the excess cost, which means I've incurred costs I haven't billed for, and it works them out and gets a net number and puts it into your income statement and corrects for that. So you're able to just make entries the way you normally would, but there will be an entry that looks at all of those and says, too much, too little, too much, too much, too much, too little, little, net difference, and makes your books right.
Okay. So, and I understand this one before this, but essentially the non-negotiable is track WIP religiously.
Yes.
And the problem that it solves is that it helps you avoid doing more work than you've billed for, or billing for more work than you've done.
No.
And it syncs your billing with your production. I'm going to stop there and
Well,
talk.
Well, it doesn't prevent you from billing. I mean, it doesn't prevent you from doing that.
No, I'm not saying it prevents
you
it.
get a $30,000 deposit. That's great. But that's $30,000 in excess of work done because you haven't done anything. Or you go out there and do $30,000 of work before you invoice anybody. And that's $30,000 of work done. Hey, it could be a different job, but on whole, the two wash out.
Yeah.
Which never happens, but I mean, it could. But it's a complex deal. It's a very useful deal. It's been around forever. Every bonding company makes people do that.
Yeah.
Banks that are dealing with big,
Yeah.
they want to know that too. The thing is, I've never met, I could do it, but I would have a hard time. I mean, I understand the principles. I understand how it's done, but it's also how it works with QuickBooks. An accountant or a very highly skilled bookkeeper needs to do that.
Yeah.
And
So
you need it.
I think it's because there's two parts of the equation. There's the accounting side and there's the project management production side, whatever you want to call it.
Right.
And they
It's
have
like
to
cash
sync.
flow and profit. Yeah.
Yeah. They have to sync. And so
Yeah.
I think what WIP, the non-negotiable is track WIP religiously. What it does is it clarifies and balances billing and production is how I would think about it, or accounting and production, whatever you want to call it.
Yeah. Accounting and production.
Yeah.
it'll account for overpayments and overwork.
Yeah. So it clarifies and it balances the two and it syncs them.
Right. Right. It makes your books correct.
But and this is where, like, on the production side, and this is more of my territory, right? Of this is why you do daily logs. This is why you have milestones on a project when you do planning. This is, that's the whole reason why you have to be organized on a project and have clear planning process.
Yeah.
So that you can sync the two. Because
Yeah.
otherwise, if you don't
know
have
what you've
status
done-
updates
Right.
on the production side, you can never do
Right.
WIP.
Right. And well, that's too much. They have a way of trying to avoid opinion, right?
Yeah.
Like project manager says we're half done. They can do it as cost. They can say, well, our cost is going to be 60% of this project, and we've done, X thousands of dollars. Then they'll gross it up and say, this is how much we could have billed if we were billing.
Right.
But anyway, it's a complex process. I gave up in my first book, not because I think people are stupid, but I thought, no, we shouldn't be doing this. But you need to know what it is, and you need to know why it's important. And if you're doing a lot of jobs and you're doing jobs that extend like 6 months and things like that, if you don't have it, I don't think you can ever point to a time anywhere that your books were accurate. Maybe 6 months after the year end, you could, when you're summing up for taxes. So anyway, that's WIP.
Okay. So that's the 8th one. Let's go to we have 4 more. Let's go through number 9.
Aging, accounts receivable, and accounts payable. Okay. That means most softwares have it. Most of us have seen it, but it's the one that says, hey, you've got these 6 bills totaling $15,000 are current. These 5 bills totaling $21,000 or 30 days past due. Anyway, they're the ones that show you
I got you.
what's going on.
Yeah. I paid for a software for a year.
To do
right?
that.
What's that?
No.
That's an example of an aging account, right? I paid for a full year of software. Don't I have to apply that expense monthly?
Oh, good. Hey, that's a good question, but no, that's not what this means.
Okay, that's good. So clarify for me.
Good point. Good point. This is aging. It applies to accounts receivable, which is money that you've invoiced that you haven't been paid yet, right? Most people give 30 days or maybe you give 10 days.
Oh, okay. So this is different.
So
okay.
This is different.
This is just accounts receivable and accounts payable in my eyes. Is what I'm saying. Okay.
Yeah.
Okay.
But that is saying it alerts you that how are the collections going, right? And there's some measurements that are really cool that.
But Martin, just so I mean, this isn't non-negotiable. That's clear. But in my eyes, if I know the invoice date and I know today's date, I know the aging.
Yeah. So you want to go look at 45 invoices in your brain and go, oh yeah, Billy Johnson, that should be due by now. Then you go find that invoice. No, that's what aging is all about. One place to look. And see,
so it's just about. I mean, but if you're billing through QuickBooks, then you basically have that already.
You do, but
But so this is non-negotiable. But I get it. But it's not that complicated. And it's not like if for some of these, I just want to be clear because I'm thinking in my mind,
it's complicated if you don't have it.
Exactly. But in my mind, what I'm thinking is some of these are being solved just by you're using QuickBooks. Am I wrong? Like double entry bookkeeping.
Partly. And I'm going to show you on the other half of it, the accounts payable. I'm going to presume that you invoice. If you invoice, it will show up in an aging accounts receivable.
If you don't enter your bills for payables.
Not now bills, but let's say with receivables, but you're dead on. If you just let it lie on your desk and because he'll be in next week and he brings a check in, you don't have anything to age. Most of us, because we send out a bill to initiate payment, will have that.
Correct.
I will not say that most people enter bills. And I think they should.
I agree with that statement.
And it does a whole lot of things for you. If you don't keep bills, you should. That's part of being accrual basis. What do I mean? Phone bill comes and you set it on the corner of your desk and you come in on Saturday with the other bills and you pay them. Well,
Right.
as far as your books are concerned, they didn't exist.
Mm.
I mean, an expense will exist when you pay them. But if you take all your bills and enter them the first thing and file them,
Mm-hmm.
okay, get them the hell out of here. They're your source documents, but go file them. Now you have in your computer, you go, man, it's time to pay bills. You click and there's a list of everything you owe, and you can pay partial. You can pay all of it. It's got a number
It
up
just
there.
allows you to be more strategic with how you move your cash,
Yeah.
essentially.
It does that, and your books are correct in the interim because the payables are in there.
Yeah.
If they're sitting on the corner of your desk and you go past the end of the month and close your books out, they're not. I mean, they're correct, but they're not complete because those bills went in this year and they're sitting on the edge of my desk. Now I'm going to pay them next year because once I go past Friday, it's next year and I'm paying them later.
Yeah.
So it's a
No,
simple.
this is really good.
The accounts receivable part is simple because most people already bill. That's how you instigate payment. Bill payments is not. Matter of fact, I'm going to say most by far of my clients do not enter bills and pay out of bills they pay.
Yeah, that's the harder one. The invoice one's a little bit easier because you're using it as an invoicing system.
Right.
It's in the same place, but it's the ones that are coming from all these different.
Yeah, it is. And
this-
now you don't get anything anymore. You get the dang email that says your OG&E bill is due.
Yep.
I mean, that I've got like, okay, well, I need to enter it anyway.
But there's ways for you to be able to receive all of those inside of. That's a whole other story. But like things like bill.com and whatever, that kind of solves
make it
that
simple.
problem.
Well,
Anyways.
remember, we're not doing this. Our bookkeeper's doing it. And you say, enter the damn bills.
Okay. So
you don't have
what's
to
the
say damn.
what's the problem that it's? I know we've already said it, but let's simplify. What problem does
One.
tracking aging accounts receivable and accounts
correct.
payable solve?
Well, receivables, both you're correct on the accrual basis, right? Second, you're aware of difficulties in the receivables. Who's getting late, who's running past due. If you paid partial balances, the partial balance shows up. So you're aware of it. It makes your accrual books correct, and you'll find problems. Okay. On the bill side, is you know what you owe at all times. You can look and see how much you owe. And then one thing that people do, I should have put this on there, but it's getting in the weeds. One thing people do is oftentimes they pay off of invoices. Okay. You get 20.
Yeah. They just
They pay off
gotcha.
statements. Is what I'm saying. You get 20 invoices in a month, and then at the end of the month you get a statement.
Right.
And it may itemize them or what, and usually it does. But you got 20 things in there and you owe $35,000.
Yeah.
So you write a check for $35,000. Well, then you go, wait a minute. You catch up later on and found out that you had already paid one of those invoices that's on this bill last month, but you paid it too late to get on to the accounting for this month. So it's on there twice. It'll come off, but it's on there twice. And you pay the whole statement. You paid it twice. It'll catch up. As long as you don't keep doing it. Because at some point you're going to show a negative. You go, what the hell's that? But you should never pay from statements. You should pay invoices by looking at invoices.
Right.
If you put the bills in, which is an invoice. Okay, let me make this. They mean the same thing, but invoice and bill. I talk about an invoice I send out so I get money. A bill is something they send me so I got to pay money.
Right.
If you put your bills in and look at them one at a time, you're not going to put the same bill in twice. So
Correct.
And you can reconcile the statement with your suppliers. This is the starting balance. This is what I added. This is what I paid off. Here's the balance. They're off by $500. What's missing? Oh, they haven't received that most recent payment. Right? So that's what it does. It makes your books accurate, makes them timely, helps you discover mistakes, and gives you something to reconcile with.
Right. Okay. The way that I would say it in simple terms is the non-negotiable is that you must track aging accounts receivable and accounts payable. What problem that it solves? It allows you to know what you owe and what you're owed in one place.
Right. Yep.
Okay.
Yep.
Number 10, what do we got?
Number 10, cost accounting. We'll just make this real simple. But cost accounting is tracking the expenses and the revenues that are due to a particular job.
Okay. So what's the non-negotiable? It has to be something more than just like, you must cost account. Like what is the non-negotiable?
Well, our cost account means you need to track the expenses and the revenues that can be attributed to a particular job. A
Okay.
sale is a sale, but which job did it come from? An expense is an expense, but which expense incurred it? The point is, when you do that, you can look at that job and say, hey, I made this much gross profit margin. Did I hit my target or not? If you don't have that detail, if all you do is have a gross mass of your total sales and your total cost of sales, you don't know if things are good or bad. You don't know what happened.
Yeah.
You know, if they're kind of neutral, if they're real good, you don't know why. If they're real bad, you don't know why.
Okay. So you have to have proper cost accounting for every project is the non-negotiable, and you're going to know if you've hit your numbers on each individual project.
The old saying is, if you don't measure it, you can't manage it.
Mm-hmm.
And this is measuring it. We had a guy on talked about. He gets an email from. He's a CEO of Robert Keys. He's the
Yeah.
CEO of drilling company. They do a lot.
Right.
They work all over. He said his CFO, I think his CFO, has to report the cost accounting effect on every job.
Yeah.
And all he wants is in the subject margin is gross profit.
The subject line of the email is gross profit
Subject
margin.
line is gross profit margin. If it's good enough, he doesn't even look.
If it's not good, he looks.
Yeah. And I suppose if it were way too good, he'd be going, wait a minute.
Yeah.
But anyway,
Exactly.
that's all he wants to know.
Yep.
So you have to know that. If you're going to be, you have to know that. Have to. It's
Yeah,
the way
that's
you
good.
learn and get better at your job.
Okay. Proper cost accounting. Let's go to the number 11. Two more.
Monthly closes. Closing your books in full CPA accounting means you kind of set them in concrete, right?
Mm-hmm.
And you can't change them and things like that. I'm not totally after closing your books, although there's some things you need to be careful of there. But what I mean by that is every month, and we set a date, typically the 15th of the following month, all the entries are in, the phone bills are in, you've reconciled your banks, you've reconciled your credit cards, you reconciled your receivables, you've been through the whole thing, and that this month is good. And the year to date, year two this month is good. We now have if there's problems coming up next month, we have a place to go back to that's been vetted and corrected and reconciled. So you have to do that every month. And that's the financial reports you would give to your bank, right? Because you go give your bank a P&L that's printed in the middle of the month.
It's going to be a mess.
The matching is going to be crazy because you got a big invoice invoice went out, but you haven't had your payroll figured yet. You just, you're just wasting your time. So closing means we come to a period. For me, I don't necessarily mean closing like accountants do. Literally put it behind a password nobody can change. That's a good idea sometimes, but you have it reconciled and buttoned up by the 15th of the following month, every month, not once a quarter.
So the way that I would I'm thinking in my eyes as a business owner, I'm rubber stamping my books, right? I'm saying, hey, all of this
Approved.
information is approved and accurate every single month by the 15th of the next month.
Yeah.
And what problem does that solve? It gives me a verified source of truth for the past, essentially.
For the start, it's a new starting point when you're looking.
It's like a
looking
checkpoint
back.
in a video game.
Yeah. Okay. I don't play video games, but
Well, but I think you get the concept of like you're
Yeah.
playing Mario or whatever,
Right.
and you're at a stage and you're playing it and then you die in the game. Well, you have to go back to that stage. But if
Okay.
you complete the stage, you go to the next one. And if you die, you go back to the second stage, not the first.
gives you a place to go to. So,
Okay. Good.
okay. Then the last one,
Last one.
3 reports: profit and loss, balance sheet, statement of cash flow. You need all 3 of those. That's what the world's looking for. And you cannot get that. I'll just categorically say, you cannot get that from your Excel spreadsheet.
Okay.
Okay. And so I'll just leave it at that. Double entry books, properly done. It's all done for you. they're simple reports, but how they're created is not, it's logical, but it's not necessarily simple. And if you're using QuickBooks or Xero or some of the other vetted bookkeeping softwares, it'll provide it for you. But I've seen many people trying to create their own books, and I'm just going, you want to talk about reinventing the wheel? That's like the triangles was the first improvement over the square wheel because it eliminated one bump. Come on,
That's
Cleo.
good. I didn't think about that. That's good.
Well, that's kind of like, yeah, you're going to go out there and create your own books. Are you effing kidding me? That's why 800 years old and still unchanged, because it works. Nobody's ever found an improvement.
Okay, so the non-negotiables that you must have all statements. What's the non-negotiable?
You have to have them available through your bookkeeping. Your bookkeeping needs to be able to produce.
Your bookkeeping needs to be able to generate those. Again, one that if I have QuickBooks, I can click a button and generate.
Yeah.
So as a business owner, I'm not like, well, it's a non-negotiable. It's good, but it's just like.
Well, I've had people literally ask me, why can't I just do this on an Excel spreadsheet? And it's kind of like an electrical engineer looking at a transistor going, and somebody saying, well, can't you just turn that on? And they have no clue of everything that's going on, right?
Right.
Electrical engineer, I don't know where I got that, but yeah. Can't you just? Sure. How hard can business be? You're right. It can't be hard, right?
Okay, so you
those are the non-negotiables.
Be able to generate all three financial statements, statement of cash flows, profit and loss statement, and balance sheet. What problem does this solve for me?
Well, they're where you get all the information. They're the reports that provide all the information, almost all the information you ever need, but 90% of the information you need to make financial decisions. Some things like the cost of acquisition for a customer, that's not in your books. That's a math you do. But they provide you all the foundational information. They answer the 6 questions. The 6 questions are, am I making money? What do I own? What do I owe? What's left over for me? And where did my cash go? The 6th question is, what should I do? It answers the first 5, and it is 90% of the answer on the 6th one, which is what should I do?
Quick ad break. It's for me personally. I've got to promote my business, and you are my target audience. If you're a contractor, you're running a business that's north of $500,000 in revenue, you already know the grind. You're the salesperson, the project manager, the HR department, and the guy that's fixing problems on the weekends and at 9 p.m. because you own the business and you're responsible. But I've got something for you. I built growth kits just to solve your problem of the chaos that comes with growth. It's a membership that gives you a growth team that's in your corner. It helps with staff, systems, and software. So you don't have to go and hire a bunch of people that you can't afford yet to fix problems that you've never fixed before. If you need to get work off your plate, we help you get up to 3 global talent hires per year as a part of our membership so that you can find low cost, low overhead positions to really take the admin work off of your plate. We mentor them for you weekly so that you're not stuck training someone from scratch. And if you need to give further training to them and other people on your team, we provide workshops to anyone that's at your company. Let me read off some of these first. Workshop titles: Own Outcomes, Not Tasks. 6 weeks going over that with your team in a very engaged setting that's virtual. Client Success and Retention: How to Handle Difficult Conversations. Communication and Meetings Mastery. Delegation Mastery, Business Financial Literacy, and How to Implement AI. That's just a few. We have over 21 workshops that are different going on throughout the year in 2026. If you need to talk through a decision on software or whatever it is, you can talk to anyone on our team to support you in your growth as a construction company. We also provide monthly masterminds with other owners who get it. So it's one membership. It's $600 a month. Your business gets more efficient and not more overwhelming as you grow. That is our goal with the Growth Kits membership. So if you've been white knuckling it and you're wondering when it's going to get easier, this is how you do it. You book a call that's in the show notes. I want to talk to you about it. and then I will show you exactly how we will help you remove some of the roadblocks in your business to growth and help you become more efficient and not more chaotic. Back to the episode.
Okay. So this is great. I'm going to re-say them in my own words because I think that I will simplify it maybe for people. Although this is all from you as a source. Okay. So
That's fine.
you're going to, again, this is something that you're going to hand to your bookkeeper, and it's very basic. Let me run through it really fast. 1, you have to do double entry bookkeeping. 2, you have to have accrual accounting. 3, you have to have a viable chart of accounts. Basically just you have to segment your expenses and your revenues into clear categories that make sense and are valuable to your business. You have to have source documentation, which is going to allow you to be able to verify everything that's in your books very clearly by a source. You're going to have daily entries so that nothing is missed, everything is current and accurate. You're going to reconcile every account on the balance sheet with an outside entity so that you have aligned truth on your transactions. You are going to be matching. You have to match. And that solves your roller coaster profits on your statements that when you look at it. Then you have to track WIP, works in process or works in progress, religiously. That's going to sync your billing with your production or your accounting with your production so that everything makes sense and it's accurate. You're going to track aging accounts receivable and accounts payable. This is going to help you know what you owe and what you're owed in a single place. Then you're going to do proper cost accounting for every project, and that's going to help you know if you hit your numbers on each individual project itself, so that you can determine what's working and what isn't, if you're hitting your targets, if you're not. Then you're going to close your books every month by the 15th of the next month. This is going to give you an approved checkpoint for your books so that you can always go back to it as a source of truth. Then you have to be able to generate all 3 financial statements: the statement of cash flows, the profit and loss statement, and the balance sheet. This is the foundation of 90% of the financial decisions you're going to make. And it answers the 6 questions that you already outlined, Martin. So,
Man, you did that by memory. That's really good.
yeah, I did. No, I just taken notes if you saw me typing. But
I've got
I
to
think
tell
this
you
is,
one thing
yeah.
is the place that you're likely to get pushback from is daily entries.
Okay.
Okay. People say, you don't really need to do that. And originating with source documents. In other words, bank feeds come in from the bank and they showed you spent $30 on gas 2 days before Frank brings in the receipt.
Yeah. Well, this is great, Martin. We'll do more on this. I think we'll cover your book in future episodes.
Yeah.
Thanks for sharing so much. It's really valuable.
But again, I hope what I hope came from this is people go, crap, I can't do that. You're right. You can't.
You shouldn't.
You want to quit your job and go back to school, and you can, but don't do it. Don't do it. It's too important. So
Good. Okay. Thanks,
okay,
Martin.
man. See you later. See you next time.
You made it to the end of the episode, but before you go, if you found yourself thinking about growing your construction business while listening today, I want to share something with you. It's called our 24 Things to Hiring and Training the Perfect Executive Assistant for Your Construction Business. And it's a free guide that we've created. It's not theory. It's what we actually use to help contractors hire the perfect executive assistant. And really, we help you find ways to delegate over 50% of your current workload and get back 20 hours of your time every single week. You didn't start your construction business to just be doing admin work, to be buried in paperwork and endless admin tasks. This is the guide that shows you exactly how to find and train someone who can actually take all that weight off of your shoulders. So this is a real actionable, great PDF that has templates and processes. It's really, really great. And I want you to check it out, even just to get your feedback and how we can make it even more valuable. But I know that you're gonna love it. The link is in the show notes. Please download it. We'd love to see how much of an impact it makes on you and your business. Thanks for listening to the full episode. Check out the guide. It's free. No reason to hesitate. No reason to wait. Download it now. And before you go, I just want to ask for your gracious subscription to our podcast. So if you have 2 seconds, it means the world to us. Just subscribe on YouTube, Spotify, Apple, or if you'd like our weekly newsletter delivered to your inbox whenever we release an episode, please subscribe in the show notes. Every week, we're talking about real strategies on how you can grow and build a profitable construction business that runs without you, so you can have less stress, more time, and more money. Click subscribe wherever you listen to the show, and thank you again for checking out the Cashflow Contractor. See you on the next episode.